some camera difficulties, but I wanted to do problem 1710 for you from chapter 17. Hopefully this video will be okay. I'm kind of doing it kind of from my garage. So anyway, let's read it quickly, just because I don't know how long this is going to work for me. I'm on page 1758. Long-term construction contracts. George is building an office building for Wilmington Company for $20 million. The contract has the following characteristics. So the office building is built to the customer's specifications, and the customer can make changes to these specifications over the contract term. Progress payments are made by the customer throughout construction, and the customer can cancel the contract at any time with a termination penalty. Any work in process is the property of the customer. So George provides you with the following details. So you have information there on page 59 from 2019, 2020, and 2021. So one says, calculate the estimated total gross profit on the contract as of December 31st of 2019, 20, and 21. So the first thing we need to do is figure out the contract price. So contract price. Then we're going to have costs incurred, and that's going to be the cost incurred to date. The estimated cost to complete, and the total estimate to date. Then we'll get our estimated gross profit, and we will need to use that for some other calculations in a little bit. So we've got 2019, we've got 2020, and 2021. All right, so it tells you in the book, it says what the contract price is, so that's going to be $20 million across the board. And then it tells you all of the costs incurred to date. That's that first line. So we'll write the contract price, which is $20 million, and that'll be just the same all the way down. They didn't do any kind of adjustments to that. The costs incurred, this is just going to be that first line. So I guess I'm missing some zeros here. Oops. $8 million for 2019. Looks like $16 million for 2020 and $18 million for 2021. So we're going to take those costs, and then the estimated cost to complete, it tells us also there, that's that second line. So the second line is going to be $6 million here for 2019, cost to complete, $3 million here. So they're really cutting it close, that 19 when they're only charging 20. And then here, no, they're pretty much done. So at the end of the year, they're done, so there's no cost to complete. So then therefore, the total estimated to date costs are just going to be these last two. So this will be $14 million for 2019, these two here. This will be $19 million here in 2020. And then back to $18 million here in 2021. So the estimated gross profit then, I'm going to take my contract price here minus my total estimated cost to date, and I'm going to take the difference, and so this will be $6 million. Sadly, this will just be $1 million, but here we're back up to $2 million. Okay, so this is the answer to number 1. Okay, so the question, once again, calculate the estimated total gross profit on the contract as of these 3 dates. So this is going to be the estimated gross profit. We're going to take those amounts, kind of, and do number 2. Calculate the percentage of completion for 2019, 2020, and 2021. So what we do here is we take the costs incurred to date. So this $8 million here, this is going to be for number 2. Okay, so I'm going to take the $8 million, and I'm going to divide it by both the cost incurred already and then the cost to complete. So these two together, so that's going to be $14 million. Okay, so I take that division, and I get 57.1%. okay, for 2019. I'm going to do the same thing over here. So my numerator is going to be this here, costs incurred, 16 million. And then I'm going to add 16 million and 3 million, these two costs, so that's going to be 19 million. So my percentage here is going to be 84.2%. Okay, same thing here. My numerator is going to be the 18 million. But my denominator is going to be also 18 million because I don't have any more cost to complete. So therefore, this is going to be 1 or 100%. So this is the answer to number 2. The percentages, again, it was calculate the percentage of completion for the 3 years, 2019, 2020, and 2021. All right, I'm going to erase this really quick. I've got a decent eraser, I think. Oh yeah, pretty good eraser. And then we'll move on to 3. Let's see what 3 asks us. Three asks us, let's see, number 3. 3 says, calculate the amount of income or loss George will recognize for the 3 years. So the amount of income or loss. So what we would do here, I just erased the percentages. I probably could have done that. Was for 2019, 2020, and 2021, I'm going to take that 57%, so that 0.571, multiply that by the 6 million. That's going to be the collections, I believe, the collections to date. Oh, no, I'm sorry. That's going to be my gross profit. So I'm going to multiply this by my estimated gross profit. So my estimated gross profit, you'll remember for 1, was 6 million. So I'm going to multiply that, the 57.1% by the 6 million, and I get 3,426,000. So that is going to be my income that I'm going to recognize for 2019. Hopefully you guys can continue to see me, sorry. For 2020, I'm going to do the same sort of thing. I've got my 0.842. I'm going to multiply that by only 1 million because that was my estimated gross profit. But once I do that, I'm going to actually subtract this number here, the 3,426,000. So really for 2020, my estimated net income is actually a net loss. And the net loss is 2,584,000. So I've got a $3 million net income here. I've got a 2,584,000 loss here. And then now I'm going to go to here. So here I'm just going to take 1 or 100% of the estimated gross profit, which is $2 million. And so that will be, but then also I have to subtract the 3,426,000, but then I get to add the 2,584,000 that's a loss here. Okay, so I get to, maybe I should do it this way. Subtract this, add that. Okay, so my total for net income for 2021 is 1,158,000. Compute it that way. Here, if we do this, minus that. Okay. All right, moving on. The hard part, the journal entries, right? So I'm going to erase this again. All right, it says prepare all journal entries related to this project for George for all 3 years. All right, we'll see if we can do this. So we have 2019, we have 2020, and we have 2021. Hopefully the camera can see all of that. The first thing we're going to do is record the costs incurred for the year. So costs incurred for a year. So when we do that for 2019, we're going to debit an account called construction in progress. That construction in progress is actually an inventory account. So I'm going to debit construction in progress, the inventory account for $8 million. And I'm going to credit a series of things. And so they would be however it is that we're paying for this construction. So accounts payable, cash, salaries payable, etc., right? So I'm going to put accounts payable, cash, salaries payable. We don't know. We're not given all the details. We just know that we're either going to pay cash or have some other liability that we're going to need to pay off. So that's going to be our credit, or multiple credits, for $8 million there for 2019. When I move to 2020, it's also going to be $8 million for construction in progress. And then for 2021, it's going to be $2 million. And that accounts for the total. Remember, the total we had, it said here, costs incurred to date. So the costs incurred to date for 2019 was a total of 8. Here it was a total of 16, but I have to just add another 8 for the year. So I've got 8 plus 8 is 16, plus 2 is 18, and that's how I got my very first cost to incurred to date from the book of 18 million. So that's how I journalized that. So now to record my profit recognized for each year, okay? So in that one, I'm going to debit actually 2 things. I'm going to debit construction expense, and also construction in progress. And then my credit is going to be, of course, my revenue. So construction revenue. Okay, so my construction expense is going to be $8 million. My construction in progress is going to be the amount that we computed previous for my recognized amount, the amount of income that I recognize. That's going to be that $3,426,000. And then, of course, we add this up, and our construction revenue for 2019 is going to be $11,426,000. Okay, that's for 2019. For 2020, I still have the same $8 million, or I should say not the same, an additional $8 million of construction expense. My construction in progress, however, is a credit, because remember that was a loss. So that's going to be $2,584,000. And then my construction revenue then would just be the difference between this to make this balance, $5,416,000. Okay? Hopefully you can see my last column. I haven't double checked to see if my video is doing okay. Here I am going to debit the $2 million for construction in progress, construction expense. I'm going to credit $1,158,000 for my construction in progress, and I'm going to credit my $3,158,000 for revenue for the year. Okay? Everybody got that? So now we've got to record the billing. So my billing is going to be, I'm going to debit my accounts receivable, of course, and credit an account called partial billings. Okay, and this is just going to be $8 million here, also in 2020. But in 2021, my billings are $4 million. And that's how we're getting the $20 million total. 8 plus 8 plus 4 is the $20 million contract price. All right, last thing. No, not the last thing. I've got to record cash collected. I hope you can see down here. If not, I'll tell you when I'm writing. So under cash collected for the 3 years, I'm going to debit, because this is going to be from what I received in the book. It says collections to date. So that's how I'm going to get this. So I'm going to debit cash. The cash amount is going to be $6 million. then I've got also 6 million in 2020. And then also 6 million in 2021. Okay? Those are the amounts that I actually received because it tells you collections to date for 2019 was 6, then in 2020 it was 12, so you added another 6, and then in 2021 it was 18, so you added another 6. Last, I'm totally out of room. Let me go up here. Pretend this is down in the bottom. I just ran out of room. The last journal entry, well, you know what the years are. The last journal entry would be recorded completion of contract. Record completion of contract. And this is just going to be a one journal entry in 2020. You would debit partial billings and credit construction in progress. And this will be for just 2020. I want to make sure that you can see it. Hopefully you can see way up there on the board. Sorry about that. So the partial billing, that debit's going to be 20 million. And the credit is going to be 20 million. And that's basically the journal entries for under 4. Sorry about the background noise. It's like craziness. How will this project be carried on the balance sheet for 2019, for 2020, and for 2021? Let's see if we can do that really quick on this side. All right. So on the balance sheet, so it's not asking for the income statement, but the balance sheet, everything, here, I'll put it here, balance sheet. So everything's going to be under current asset. Current asset, we have accounts receivable for 2019, for 2020. I guess I do have to erase all of it. And for 2021. So my accounts receivable is going to be 2 million here. 4 million here. This is at the end of the year, right? Because I've already received some of what I billed. So this is just the balance in accounts receivable. Then we have construction in progress. Construction in progress is going to be 11,426 and 16,842. And of course it's going to be 0 in 2021. Less partial billings. My partial billings in 2019 was 8 million. In 2020 it was 16 million. And then here of course it was 0. So my construction in progress in excess of billing is the difference here, so 3,426 and 842. All right, and that's how we do problem 1710. Hopefully that was helpful. Hopefully this video is good, and I will see you in class soon. Bye.